With the price of gold close to historic highs, the global economy in deep trouble, and speculation about future inflation, investors are right to ask how high the price of gold can go and whether it might one day trade above $2,000 an ounce. To help answer these questions, among others, I have with me John Mayer, highly regarded mining analyst at SP Angel, Kerim Shenner, Managing Director of Ariana Resources, and Darren Lebrenz, President, CEO and Director of Pure Gold. So John, first, what do you think might happen to the gold price, and what events should retail investors be watching out for?
Well, there's a lot going on in the gold market right now, and I can see good potential for the price to move up again. Certainly been a lot of private investor buying, on a very wide scale. We had central banks buying a lot of gold over the last 18 months. China and Russia, they said that they were going to stop buying gold, but I'm not convinced that we believe what they were saying. The price had gone up. $1,700 is a big move for the gold price, and it's driven by inflationary factors. Clearly the risk presented to the global economy by the coronavirus, the money printing, quantitative easing, low interest rates, and general uncertainty going on in the world.
Back in Roman days, a Roman could buy a very nice robe to go out for about an ounce of gold. And then here we are a couple of thousand years later, and for an ounce of gold you can buy a fantastic suit. So if you look at it from that sort of historical perspective, through that lens, gold has a very important place in the global economy. And of course, it's a critical reserve backstop for the world's central banks. So as long as the central banks continue buying, they know what's good for them. And I think that as a result of that, we can be sure the gold price will continue to remain on firm footing for quite some time yet.
Under what circumstances could gold breach $2,000 an ounce? I mean, how likely is it?
$2,000 an ounce is a massive barrier for gold. It's psychological, but I'm not convinced that barriers really work in this sort of trading environment. I think if there is enough momentum, the gold price will just flow through that $2,000 an ounce level, and I don't think it will be a psychological barrier in this environment, because it's not a trading environment. It's much more of a fundamental environment where people are buying gold as a protective measure against inflation, and the more money is being printed and pledged by the major economies of the world, the more risk of inflation down the road there is. So there's so much needs to be done, and there's such strong drivers for gold that really it could go anywhere from here.
Yeah, I mean, certainly even before the global pandemic of this year, we were seeing a world where we're seeing increasing political uncertainty, increasing economic uncertainty, and I think there's a lot of factors that have been fairly supportive for the gold price over the last years. In fact, leading up to this event. So when you look at it, we've got quantitative easing has been increasing, government debt has been rising. We've got real interest rates have been pushing towards zero. Central banks have been buying gold. And I think all that's extremely constructive for gold. So, yeah, I mean, I absolutely think that we're setting up here where we could see gold exceed $2,000 an ounce.
So, John, what price for gold do you think is realistic?
I think it's quite realistic for gold to go to $1,800, $1,900 an ounce. If you think you've got lots of gold mines around the world that are impacted by the coronavirus, and that pulls back a little bit on the physical supply, and yet the demand is increasing, and I think central banks will continue to buy gold because they can see that the United States, for example, is going to issue an awful lot more treasuries, and that economy may struggle a bit with US unemployment rates sky high and likely to be something over 10% by the year end.
A strong gold price is important for explorers and producers, but so are new discoveries and proving up existing assets. Now, which small cap mining company should we be looking out for in the next 6 to 12 months, do you think?
Well, we should be looking for margins to grow exponentially in the next 6 to 12 months because the gold price has gone up and costs have gone down, and costs are driven down locally because local currencies have collapsed. If we look at Ariana in Turkey, where the Turkish lira has fallen. If we look at Charat Gold, which operates in Armenia and Kyrgyzstan, again weak currency environments. Condor in Nicaragua. I'd like to say that Scott Gold was working in a low-cost environment in Scotland, and presumably costs will be under pressure there. So a whole series of companies. If we look at Pure Gold in Canada, a company that's going to be in production by the end of the year. Again, it's doing well. I mean, what a great time to be bringing production in. So a whole raft of smaller companies that are really very well placed to not only benefit from the massive increase in gold prices, but also the collapse in costs in local currency terms.
Darren, could you tell us what Pure Gold has been up to? Anything we should watch out for?
Yeah, I mean, Pure Gold is a growth company. We're focused in Canada, Red Lake, Ontario. We are building Canada's next gold mine. In production, our mine will be the 5th highest grade mine in Canada and the 17th highest grade mine in the world. So certainly, very high grade when you compare it against, the rest of the producing mines that are out there. It's a tier 1 asset in a tier 1 jurisdiction. We've got, a million ounce resource at 9 grams per ton. We're fully funded for production, and we're targeting first gold pour for December of this year. Based on that alone, when you look at the current market dynamics, as we said, the increasing gold price that we're seeing, declining Canadian dollar, both of those have put us in a position where we think we're perfectly timed for production. And importantly for listeners to understand is this is a mine that's being built as a scalable asset, if you will. We have strong growth potential outside of our first phase of mining. We've carved out a million ounce resource out of a larger 2.1 million ounce indicated resource and a 500,000 million ounce inferred resource. And so we think we have a lot of room to grow. So from a share price perspective, we certainly think that we're due for a strong re-rate as we move into production. With first gold coming in December, we're well timed with respect to gold price. And then beyond that, we think that there's a lot of gains to be had with the strong growth prospects that we see on the property.
Kerim, could you tell us a bit about Ariana Resources and what the company's up to right now?
So Ariana's operations are focused almost exclusively in Turkey, and particularly Western Turkey. We have a 50-50 joint venture with a Turkish construction group known as Prosir Construction. They have helped us to build and operate the Kızıltepe gold mine, which is one part of the joint venture. There's another deposit that we refer to as Tavşan. We're looking to develop that as our second mine. But at the moment, we've got the one mine running at Kızıltepe. We're producing, on average, life of mine, about 20,000 ounces per annum. We've done better than that, in fact, in the last couple of years, reaching about 27,000 ounces per year. This year, we're expecting about 18,000 ounces as we sort of move into some of the satellite pit areas. So we have this joint venture running there in Western Turkey. In addition to that, we have an asset in northeastern Turkey that contains our largest individual resource. There's about 1 million ounces in indicated and inferred JORC resources in a place called Artvin, which is in far northeastern Turkey. And we're continuing exploration and development activities on that project area in our own right. But having said that, we announced late last year that we were looking to potentially partner that project in the context of an expanded joint venture in Western Turkey as well. So bring both the Salınbaş asset in northeastern Turkey into the existing framework of our joint venture, but with the addition of new capital and new expertise from a third party. So we're continuing to work on the DD process and the evaluation process associated with that, and we're expecting to hear from the third party in due course. We've unfortunately, because of the circumstances associated with coronavirus, it's limited the opportunity for people to move around, the consultants to finish their work on time. And as a result of that, we've had to delay the conclusion of this process with the third party. But we've extended until the 30th of June now. and we're hoping in the next month or so we'll have some further clarity on how we proceed. And then in addition to that, I should just mention that we're also earning into 50% interest in copper gold assets in Cyprus.